Do you need cash to pay your employees? To pay yourself? Well, stay tuned because in this video, I'm going to show you how to get the cash you need. You may also be asking, how do I turn the PPP into free money? Or is the PPP loan the best COVID-19 option for me? I'll be answering those questions and more right now. Hi, I'm Janice Blair, a certified public accountant and owner of Holistic Accounting Management, where we specialize in the hemp, CBD, and cannabis industries. Welcome to another program in the Free Money series. This one we detailed the Paycheck Protection Program for hemp and CBD businesses. The PPP is the Paycheck Protection Program, and we might have heard that it ran out of funding in the first 2 weeks, and it did, but the program has been refunded. However, again, money is already running out, so if you haven't applied, you can still do so as soon as possible. If your bank or lender is still accepting applications, get your application in. You can also go to a new one if they're not. There may be a third funding round by Congress, but that's a little unlikely. Now, the Paycheck Protection Program is meant to be a grant, not a loan. But due to the rules, it does start out as a loan and then ends up as a grant. However, that's only if you use the funds as intended. At least 75% of the loan has to be on payroll costs, and no more than 25% for items such as rent, utilities, and the interest. Not your mortgage, the interest on it. Is the Paycheck Protection Program, the PPP, the best option for you? The PPP is cash to keep paying your employees, including yourself. Do you need cash to keep paying your employees or bring them back? And can you spend 75% of the loan on payroll in 8 weeks from receiving the money? Also, can you keep, rehire, or new hire the same number of full and part-time, what we call FTEs, employees as in 2019? Because that's what's going to be needed to change this loan into a grant. Otherwise, it's going to be a loan. Is the PPP loan the best option for you? If you do not have a large payroll, it may be better to skip the PPP and use the Employee Retention Credit, which you can use for payroll through the rest of 2020. The Employee Retention Credit is a credit for up to $5,000 per employee for the pay you pay them in the rest of the year. But you can't do both of them. So you'll want to see our video on the details of the ERC if you're considering that. The PPP is not to keep your business going. There are other options for operating cash, including the Emergency Impact Disaster Loan. And there are other traditional loans for COVID-19 from the SBA, the Small Business Administration. Those traditional loans, the 7A and 7B, they have had their requirements altered some for the COVID-19 crisis. So they're a little easier to get. You may want to consider these loans in addition to or instead of the PPP. Now, once you've decided to use the PPP for your employees and to pay yourself, apply as soon as possible. You must apply through a bank or fintech, financial technology company. They will send your application to the SBA. You do not send it directly yourself. The community banks have had the best results for small businesses and funding round one. If you don't have a local community bank, check out Cross River Bank. They may be able to help you even if you've never had an account with them. New options have been added for financial technology firms such as PayPal, Square, Veeam, Bluevine, QuickBooks Payroll, QuickBooks Self-Employed. Both of those, if you have either of them, the payroll program or the self-employed, it has a very easy onboarding of your application. There's also Ready Capital and Fountainhead Capital. Now, I want to make a note here that I have no opinion or financial interest in any of these institutions. I'm just giving this for your information. There are also loan brokers and partners that will accept your application and forward them, match you up with a bank or a lending institution. Cabbage, that's Cabbage with a K, Lendio, Biz2 Credit, Divvy, On Deck, and Funding Circle. These are options that you can check out and see which ones are still open and which may work with you. I have no opinion or financial interest in any of these institutions. Now I want to talk about how the PPP program actually works. For specific rules, you can go to the home.treasury.gov and you can actually click on how to calculate loan amounts. You can also find the same thing in the SBA website. But in general, you must have been in business with employees on February 15, 2020. Now your loan amount is going to equal the average monthly payroll expenses times 2.5, which is basically 2.5 months. And your average monthly payroll expenses is equal to your payroll expense for 2019, plus your employer paid payroll state and local taxes, and the health and retirement benefits you pay on behalf of your employees. And you're going to take all that and divide it by 12. That'll give you your average monthly payroll expense. Then you multiply that times 2.5. So they're giving you 2.5 months worth of payroll expenses. Note that the maximum yearly payroll for any employee or an owner is $100,000. So anything above that you have to take out of your calculation for each employee that would go above that amount. When the loan is forgiven, it becomes a grant, which means you don't pay it back and it's not taxable. It is free money. It is cash. However, you must follow all the rules for the loan to become a grant. And any portion of the loan that's not forgiven has a 1% interest rate, which is pretty good, and a maturity of 2 years. The first payment is due 6 months from the funding date, but it will have to be paid back in 2 years. Now, in order for this loan forgiveness to happen, these following rules must be followed. You must pay at least 75% of the loan to the same number of the average full-time equivalent employees, with at least 75% of the prior pay rates. Full-time equivalents, what does that actually mean? Well, think of it as if you have one full-time person and you have 2 part-time people, that equals 2 full-time equivalents. So you can mix and match that, but you still have to end up with full-time equivalents that were the same after you get the loan and as you did before you got the loan. You must pay no more than 25% of the loan, which would be the remainder after you've paid 75% for employees. No more than 25% for rent or leases, utilities, and interest. That's not your mortgage, just interest on your mortgage. You can't pay debt off with this, but you can pay the interest on it. It must be paid within 8 weeks from the date of deposit of the funds. That's when the clock starts ticking. You have 8 weeks from that point to make the 75% to the employees and 25% for rents or lease or utilities. Now you can pay more than 75% to your employees. That's fine. You just have to do at least 75%. Maybe you've brought more people. Maybe you're paying them more. Maybe they've got some bonuses coming in or something. That's fine. But it must be at least 75%. And then the remaining amount can go for the rents and leases, utilities. And all of that has to be spent on that amount in the 8 weeks. If you spend less than the entire loan, you can either give back that portion of the loan or it'll be held as a regular loan. Now, on top of all of this, you must keep and turn into your bank documentation of what 100% of the loan money was spent on to meet the above rules. Any portion of the loan that is not forgiven, again, will have a 1% interest rate and a maturity of 2 years, with the first payment 6 months from that funding date. Now, the documentation for your bank and loan forgiveness. You must keep accurate and complete records. Now would be a good time to find a bookkeeper or accountant to help you set up and maintain your accounting system. If you're maintaining your own books, it may help you to create a new separate bank account to deposit only the PPP funds into. Then only use that account to write checks, pay online with your debit card for all your payroll expenses, except the federal employer side of the taxes, the FICA and the FUTA. That doesn't get included in there. Out of that same account, you would also pay your rent, your leases, utilities, and interest up to that 25% for the 8-week period starting when you receive that PPP money. Do not use this bank account for anything else that is not allowed in the PPP rules. Now, documentation for your bank also includes a number of forms that you will have to bring to the bank or transmit to them in some way. For C Corps, S Corps, and LLCs who file at 1120, you'll need your 2019 Form 941 for what you paid your employees, and your 2019 1120 or 1120S. All entities that file as partnerships, that's a 1065 return, you will need your 2019 Form 941 and your 2019 Form 1065, your partnership return. Farms that file a Schedule F, you will need your 2019 Form 1040 and your Schedule F. And you will also need Form 941 if you have employees. Your Schedule F is in lieu of Schedule C. And the way this works is that you follow the same rules as a self-employed person who would file a Schedule C, except you bring in and use the Schedule F. Now, for eligible nonprofits, you will need your Form 941 for your employees and your Form 990, Part 9, or other documentation of any retirement and health insurance contributions, and a payroll statement or similar documentation for the pay period that covered February 15, 2020. For self-employed, sole proprietors, single-member LLCs, and independent contractors, what you're going to need is your 2019 Form 1040 Schedule C, the 2019 IRS Form 1099 Miscellaneous, which details the non-employee compensation received in Box 7, or invoices, bank statements, books of records, establishing you were as self-employed in 2019. You'll also need 2020 invoices, bank statements, or book of records establishing you were in operations on February 15, 2020. If you have employees, you also need a Form 941 or a 944 if you didn't have enough to file a 941. Documentation of any retirement or health insurance contributions, and a payroll statement or similar documentation for the pay periods that covered February 15, 2020. So remember that you had to be in business and had employees on February 15, 2020. That is why that extra amount from January to February 15th is being required. Now, the PPP is available until June 30th, 2020, but the money is already running out. If you have decided that the PPP is an option for your business and you have not yet applied, you should do so as soon as possible. It might be within days. There was an update yesterday that appeared that there still was funds to be given out, But there's a line of people. So you'd really want to get this in this week. And I would say even today would be a good day. Just as soon as possible, for sure. We just don't know how fast that money is going to run out. Please note that further guidance is available on the SBA website. That would be www.sba.gov/funding programs/loans/coronavirus relief options/paycheck protection program. On this site, you can find more detailed answers on loan calculations, forgiveness, participating lenders as of May 1st, they have a list, and all SBA COVID-19 programs that are available beyond the Paycheck Protection Program. In conclusion, if you're looking at the Paycheck Protection Program, please consult your CPA, accountant, or attorney for advice and help to accurately and completely file your PPP loan, follow all applicable rules and regulations in order to have your loan forgiven and become a grant instead of remaining a loan. I want to thank you for tuning in and watching this video. I hope it's helped you find some of the funding that you may need to get through this difficult time. If you have any questions or you need some help, please schedule a free 15-minute session by clicking on calendly.com/JanBlairCPA on my Instagram page at JanBlairCPA. Thank you, and I look forward to seeing you in the next video.